This is the $1 Million Mortgage Experience Podcast. I am your host, Jon Maddux. Welcome to the show. All right, welcome to the show. I'm here with Dave Temko from C2 Financial, the largest mortgage broker in the nation by volume, right?
That's right.
All right, so let's get started. All right, so I guess the first question is, what's it like being the owner of one of the biggest mortgage brokers in America? What's that like?
Well, it's a great feeling. Like you said, I am an owner, and it takes an incredible team,
Right.
corporate staff, executive management. It really is a collective, effort of all of our originators, AEs, processors,
Right.
title escrow companies. And ultimately our borrowers, that come to us and come to our LOs
Right.
for loans. And it's just been a long time coming. We've all worked super hard to be here.
Yeah, you guys have been around a while, right? I mean, you guys started back, I remember hearing about C2, what was it, 2010 maybe? Or when did kind of get your start on it?
Yeah, so I started the corporation back in, I think it was 2007.
Okay.
So right when the market had turned, I was like, I'm going to start this corporation. It was kind of a shell before I really wanted to get things going when I felt things were coming back around.
Yeah.
So it really kind of trickled over. I got an office with a lot of space, and I was the only one in there. And then over time, I started recruiting corporate staff and started bringing on LOs and bringing on, obviously, the lenders. And it just grew from there, just kind of organically, and brought us to where we are now, which is just, it's an incredible place. It feels really good.
How many LOs do you have now?
I would say
Roughly, because I'm sure it changes day by day.
I would say
right?
we're probably around like between 800 and 1,000 loan officers, something like that.
Wow. And
Yeah.
we all know loan officers, we as loan officers can sometimes be prima donnas, or we like to demand things. And so, you have the wide range, right? You have the LOs you never hear from. And then you have the LOs that are like, always like in your face. So I'm sure with that many LOs, it's got to be, I know you don't, run every single day-to-day operation, but I'm sure you hear some stories, right? Like
It's funny. I mean, we have a range of LOs that are doing maybe one a month,
Right.
or 30 a month, or 50 a month, or whatever that might be. And of course, the LO that's doing one a month, well, that's a very important loan to him.
Yeah,
And
right.
I mean, don't get me wrong, the one that's doing 30 or 50 loans, those are all very important to him or her as well.
Right.
But it's they have a little bit of a different bandwidth to kind of understand the nuances of what it's taking right now to get a deal through, what have you. So,
right.
but we, the loan officer is our client, and we have our best efforts to make sure that they're well satisfied and get their deal through. I mean, that's on the lenders, our relationship with lenders and their AE. But we get the checks in and the payouts out as fast as we possibly can, which is what's important to them too.
So that's great. And the trends I would ask, like, are you, obviously the rates are ridiculous right now.
Definitely.
Are you guys seeing is it a lot of government, or is it mostly Fannie Mae? Like, what kind of, do you have an idea of trends on kind of what percentages of loans you guys are doing? I'm sure it's mostly Fannie, Freddie. God, that stuff's so cheap right now.
I mean, a lot of that stuff it's all getting bought off on secondary market to those,
Yep.
the Fed is buying the bonds. We have Fannie, Freddie that's packaging that stuff up and taking that stuff. But I mean, it really ranges, and that's the beauty of us being a broker. We've got 100 plus lenders that allow us to be competitive in any market, whether or not one's being competitive and they're in the market and the other's out. So
right.
it just depends on what the nuances are to that borrower and making sure that they're finding the best lender, and that's what our broker channel can do.
Yeah, I think there's been a trend with brokers growing. I remember before the crash, it was kind of, it was similar. There was a lot of brokers that were trending up, and then after the crash, it was like all retail and a lot of lenders, right? And so I know you probably know this intimately. Is in the last, say, 5 years, especially, there's been a trend towards mortgage brokers. Like, people are leaving the I don't want to name names, but the lenders, the big box lenders out there, and they're coming to be independent brokers. The way I see it is in a way. It's kind of like, it's a terrible example, so forgive me, but like a hairdresser that is like, I don't need the clients to be, I don't need the front store to get the clients. I have my own clientele. I'm going to go now start my own thing, but I need a kind of like a backing in a way, a C2.
Like a Phoenix salon, right?
Right. Where you can run it, but it's like, so do you think your brokers are more like it's a franchise in a way? They're in a sense, because they're running their own shop, but they're under your umbrella in a sense, right?
Well, they're very much entrepreneurs.
Right.
We provide them, and it's not for the faint of heart. I mean, you're coming from, if you're coming from the mortgage banking, the MLO channel or that mortgage banking platform, generally it's a seasoned loan officer that's ready to cut the cord with that security blanket of leads, of a cush office and having, but ultimately there's a lot of things that come with that.
Right.
And that could very well be red tape. It could be corporate egos and this
middle management
and hammering round pegs into square holes every day. You know what I mean? It's like what you see is not always what you get there. On their end, there's padding on rate sheets, or and they're getting squeezed. So what we do is what you see is exactly what you get. There's no padding on any rate sheets, and if there is, which there isn't, you can go to 100 other lenders. I said, if one underwriting's line's backed up, well, then guess what? You have this place to go.
Way more options.
More options, and that's really what we do. Is these our loan officers? They don't want their hand held. And we're not here to do that for them.
Right.
We basically give them all the tools and we have the compliance. So make sure that they are operating in the fashions needed for, consumer purposes.
Today's day and age, you got tons of regulation.
Exactly. Yeah. So all the regulatory is taken care of. We provide all that stuff. We give them access to all the best lenders to be the most competitive and provide any client that comes to their door with the best loan. So it's an interesting model. It's very compelling. And it's just, like anybody that's had a job that's kind of working on a side project or something that wants to be an entrepreneur, well, this is an opportunity for them to really be an opportunity in a career that they're already really striving in, but can make even more doing.
You mentioned something about getting away from the office, and with COVID, I imagine there's all these people that are like, I'm not in the office anymore. They're working from home, and they're like, why am I paying, getting a split or whatever from whatever. So it's got to be, you got to have, I'm sure, a trend towards that where people are like, I can just work from home and do loans, and I don't need to pay the big overhead, of an office or have this. So might as well come do something with like a C2,
Yeah, no, absolutely. I mean, it's interesting. It's almost like a silver lining.
I'm sure C2's helped you guys. That's what I'm trying to say.
Yeah, no, it's almost a small silver lining in this because we were perfectly positioned. Our loan officers are perfectly positioned. A lot of them have their own executive suites, or they run a team, or they work from home.
Right.
And, they're very independent and they can still get loans done. And interest rates are low, property values are still strong, and people are generally, some of them, not all of them, but are still making good money and can afford and can qualify for a refinance. So it's, I don't know, we're kind of like I don't want to say a perfect storm, but we're in a position where we can kind of hunker down and do pretty well through this. And I think it's a great place to be from a profession standpoint right now. We're back?
Yeah, we're back. Okay, cool. So we had a little snafu. The mic died. So I wanted to ask you, because commercial lending as a mortgage broker to me has always been fascinating. It's like, we got the resi stuff, right? And I say that begrudgingly because, more residential mortgage brokers don't call it resi. And when I talk to commercial guys, they're always like, oh, you do resi? And you're like, yeah, I do resi, but commercial lending is cool because it's like big loans. A lot of them are big loans. They're sophisticated borrowers. A lot of the people that own commercial property have a big, like a massive house or a jumbo home, a jumbo loan. So it naturally kind of makes it so you want to partner with a commercial broker so that you can get those referrals, you can refer them, and it just kind of makes a kind of a cool referral relationship. As far as getting into commercial, because I know you started with residential, right? Mm-hmm. How did you get into commercial, and tell me a little bit about your journey into that space? Yeah,
it kind of was identified, that I wanted to get in commercial after the market crash of the global financial crisis, right. I I jumped into that because I saw a mentor that was in the residential mortgage industry, had a mortgage company, and was kind of pulling his hair out, going, "Holy shit, this is crazy." And then I looked at another guy that was in the commercial space and was just kind of steady Eddie, and I go, "All right, that's the direction I want to go right now."
Right.
So I jumped into commercial brokerage, put my nose on the grindstone, was in a boiler room, dialing for dollars, mean and green kind of a situation. And that evolved into kind of finding a really good hybrid space, coming from the residential mortgage brokerage background and being raised in that and wanting to be in commercial. I found that commercial finance was a good hybrid, and that was kind of like my calling.
Yeah.
So I went through commercial banking and then back into commercial brokerage. And I just felt that as a broker, you have the ability to be of better service for your clients just because you have options. I mean, our job as a broker is to create options, and it's not one size fits all anymore.
Right.
So I've worked with every kind of COI per se across the board through my career. And I found that the residential mortgage broker was by and large the largest referral partner that I worked with.
That's cool.
Yeah, it was great.
And you refer residential deals back to them?
Absolutely.
Yeah,
it's a two-way street.
Yeah, so like the guy who owns commercial property is going to have probably a jumbo loan, and then that's probably a really great way to get, if you're in my chair, if you're in a mortgage broker's chair. I'm not a mortgage broker anymore, but I remember the days of wanting to get those referrals, those big jumbo referrals.
Definitely.
And that's part of what our podcast, right, is like we're trying to get, like, how do you get big jumbo loans? Mm-hmm. So partnering with a commercial broker is got to be one of the best ways, because you could probably tee it up, right, to that mortgage broker, like, hey, I got a client for you. They have a 5-1 ARM, and it's at 4 3/4, and it's coming due, and they're going to adjust. I need you to get his refi done, and here's the stuff, right? Like, you would just tee it right up for them, and then vice versa. Obviously, you'd want back, like, oh, I found on my 1003 a scheduled real estate. This guy has an 8-unit property. I can't do it, or he's a mixed use, or he's a business owner, and I need to refer it back to you. Is that kind of how it works? Like,
yeah, I mean, it's really a kind of a comprehensive kind of overview, like a deep dive for a client. You're looking to assess an opportunity to help them, and also, right, first and most, you want to make sure that all their loans are in the best position possible.
Right.
So I'm looking at scheduled real estates all the time, and predominantly commercial real estate. But yeah, people definitely own homes, and that's where they live, and the properties that they have, or the business that they have, or the job they have supports that. So
right.
You can see, like, hey, what's that rate? And I can tap on a partner's shoulder and say, hey, is this kind of where the market is for a deal like that?
Right.
And at least hey, I think it adds a lot of value, because it's taking kind of an alternative approach for a client, going, hey, I know I'm focused on your eminent need right now, which is me doing a commercial loan, or as a residential loan, so me just doing your residential loan. Have you considered, I noticed that you're at this rate, or something like that. And it's like, well, I didn't, clients are kind of caught off guard, like, oh, I never thought you did that, or I never thought you had a partner that could help with that. And it just allows them to kind of take a different approach and really deepen that relationship.
Yeah, like a holistic approach that you can add value back to that client.
Absolutely.
And then when you do that client, something happens in their brain. I think they just, for some reason, think of you differently. They're like, oh, wow, this person has more, they're adding more value to me. They're adding more, they're helping me. They have a bigger kind of a global perspective on my financial picture. So instead of just becoming the one LO that helps them in this one deal, now you're like kind of like a overall, like a financial advisor.
Absolutely.
Sense, right?
You took the words out of my mouth. Yeah, it's totally like an advisory type role. I mean, you're not advising them on investing their money like on on a money market.
Right.
But I mean, these assets and the finance, it can drive a return. It can drive, how they live their life. It really can change the landscape and kind of the path that they can take going forward, and capitalizing on where the market conditions are before, and having, our fingers on the pulse, our ears to the rail. We know that's our business.
Right.
I'm in the commercial space and have a residential mortgage brokerage company with, 1,000 loan officers that are, rock stars that do really well. And I tap on as they come to me with opportunities, I try to spin it right back and give them those.
That's cool.
And just make it a team kind of, all ships rise, kind of situation. And ultimately the client's getting the best service. It's what it's all about. And it feels good because you want to know that you take good care of your clients.
Right.
And there's no better there's no better compliment than a referral. If you take care of your clients, they're going to tell their friends.
100%.
And they're running in similar circles. So if it's an
for sure.
affluent client that has commercial real estate or owns businesses, they're in that same circle.
For sure.
And you're getting those calls like, hey, you did a great job for so-and-so. And he gave me your number. She gave me your number. Like, yeah, absolutely. So glad they put us in touch.
That's the best feeling. It's the most rewarding.
Totally.
It's so great.
And that just happens with time. You
Yeah.
know, it's not something that's going to happen overnight. But it definitely does happen with the LO that we have at C2 for sure.
That's cool. So C2, you have all the products, the tons of different products, plus commercial.
Mm-hmm.
Talk to me about kind of why do you think people are leaving retail and going over to be a broker? Like you might have some intel on that since you guys get the benefit of having brokers leave retail. I mean, imagine the conversation must be like, okay, I'm leaving a bank or I'm leaving a big box lender, and I want to become a broker. What is some of the benefits that you guys pitch?
Freedom.
Yeah.
Number one.
Yeah.
You know, freedom to
get rid of those golden handcuffs.
Golden handcuffs out the door. Yeah, you're cutting the cuffs.
So you think brokers are expanding? There's a big trend. It's like one of our guys here calls it the broker renaissance. It's like that. There's a lot of brokers, right? People leaving, and maybe if they're seasons, maybe they were a broker back before the crash. Maybe they went to be a lender during the kind of the rise back up after the post crash.
Right.
And then I'm curious because COVID has changed some stuff. Brokers are winning though in COVID, right?
I would say so. By our numbers, I'd say they are.
Right.
I think they're doing really well.
Yeah, because they have choices.
They have choices. There's a lot of freedom. A lot of freedom, a lot of lenders. One lender's backed up. We've got another one right behind. One lender's backed up. There's 99 behind it. You know, so it's allowing somebody to pivot and really be quick and nimble, and access a lot of very competitive financing for their clients. So it's not for everyone, but I think if you're at that space and you're kind of on the fence about whether or not you're going to cut cord from being a mortgage banker, a retail banker, a retail loan officer, going to the broker channel, then I'd say to come on over, go for it. But that's me, and that's my mentality. You have to have that.
In the water, it's nice.
It's warm.
Brokers are better, right?
Yeah, that's right. That's right.
So you do commercial deals, like you were talking about how with C2, you get referrals to the commercial side. There's got to be, so part of our podcast is we're very big on how to expand your referral business. So right now, with rates so low, there's low hanging fruit. People are busy. They're not probably even listening to podcasts because they're so busy trying to get loans done. But when they come back to saying, hey, I need to find loans, like where are some really good referrals? Maybe the one we talked about before, which was a commercial and a resi partnering. What else do you think is a good kind of referral partner? Financial planners are good.
I've worked with every kind of what's called COI, Center of Influence,
right,
a coined term, and I've worked with every single one, whether it be real estate attorneys, financial advisors, CPAs, you name it. And I think that people that are in the financial space, like the lending space, are going to have a more cohesive referral setup. Obviously, if you're doing the finance and you can partner with the residential agent, then for sure you're basically making their deals happen. They're getting a listing or they got a buyer. They need a pre-qual. They need that buyer to get financing and make that deal happen. So you're the crux of that transaction.
Oh, and they'll let you know.
They'll let you know, and if you screwed up, they'll let you know. But but generally, that's going to be a pretty strong referral source, especially when the market changes and maybe rates go up. It's because the market's improving, and so the Fed feels that they can increase rates because the market will support it or will bear it. And then at that stage, you're going to want to have those relationships with your residential mortgage or your residential loan or your residential agent that's representing buyers or sellers. You're going to want to have that. You're going to want to be the guy or the gal that's the pre-qualified lender that's in the open house, or you're on the line with the buyer and getting them pre-qual, because every offer needs to come in with a pre-qual letter, otherwise, and some proof of funds, and you're right there. Right. So there's that. I work with commercial real estate brokers for a long time, but there's a lot of, collectively you guys people in that space can really work well and provide that team kind of focus.
And not just focus on one type of thing, like spread it out a little bit, right? Get a couple referral sources.
Absolutely. Right? There's definitely multiple types of referral sources. But I think that people that are in touch with real estate, at some capacity are going to be able to do that probably more than, just your financial advisor that's trying, because a financial advisor has never helped me on the commercial side because they always want their clients to sell their assets and put their money into management, versus exchange and help me finance it, or exchange and have a commercial broker do a 1031 exchange to another property. So there's different motives, but.
Yeah. And, one thing I found was if you have a non-depository, if you're a broker, you're non-depository, right? So let me kind of break that down. So
I'm familiar.
Yeah. So like if you work for Wells Fargo, they're gonna steer someone to like an asset manager who is gonna say, put your money here, right? Like put your money with us. But like if you find independent like asset managers that aren't depository or banks, then you can partner with them as a broker because you're also non-depository. And then there's a real cool synergy there because they're like, they're the enemy, right?
Totally.
Because they're going to take the money away from the asset manager to get them a lower rate on their mortgage. Mm-hmm. Whereas a mortgage broker could say, well, I could put you with a Wells product or this product, but you don't have to put your money over there. You can just keep it here with your. So I think that's the one thing that I think would be good for partnering with an asset or a financial advisor, right?
Absolutely. I mean, the goal of an institutional bank is really the cross sell,
right?
And that jumbo product puts them as their first claw into that client. That's the client that they're after. With those, if you're looking at a jumbo type borrower, they're probably going to have those assets that they can put under management, or they have a business, or they have all those components, which allows them to really cross-sell and deepen that relationship. So they're going to bend their back on a jumbo rate to get them in the door. Sure. And then boom, you're out of a client. Like they're in the fold with a bank. And people generally, I think, like to simplify their life. They're like, hey, I've got my loan here. I got my bank. I got my deposits here. Yep. It's on auto pay. It's like, so from an independent financial advisor, then working with an independent mortgage broker, I think is a great, there's a lot of.
Keep it away from the banks, yeah.
Yeah,
it's
definitely.
Good. So we're in an election year. There's turmoil, a lot of turmoil. And without getting into too many politics, the mortgage brokers are doing well. Obviously, the rates are good. Not if you're trying to save money, they're not good, but people are buying real estate like crazy. People are buying commercial properties, or is that slowed down a little bit?
Yeah, it has slowed down a bit, but it's still pretty active. I mean, I think people that have the capital to put to work are pouncing on those opportunities. Yep. I'm seeing some good deals. I'm seeing some clients come through, and I'm helping finance good opportunities. I'm like, that's a good looking deal,
Yeah. Are there good products? Like, what's like the minimum down to buy a commercial property? Let's say you wanted to buy like a owner user office or something like that.
So I get this question all the time from residential loan officers. Hey, I've got a client that wants to buy this property, this apartment building or this office building, and they want to put 20% down. I go, I get that, me too, but that's not how it really works. You got to look at the property as if it's the borrower. Like a borrower has DTI to buy a house, well, a property has the property has the DSC to support the loan. So it's a function of the cash flow of that property that will determine the loan amount that it can support, and then ultimately the down payment between that loan amount and what the purchase price is.
Makes sense.
So the minimum you're going to be able to put down is generally 25%. If you're buying a property in California, it's definitely not going to be 25% because
35 maybe.
It's going to be 35, 30, 35, 40, something like that. I mean, if it's coastal, a stone's throw to the beach, I mean, cap rates are compressed. I mean, the returns, it's going to take it's basically just putting your money in a safe holding. It's like, because you're not getting a return at the bank, so you might as well get, a 2.5 or maybe a 3%, by the beach on an apartment building. So that's the way some people look at it like that. So, but there's there's definitely still opportunities out there, and I think there's probably some money sitting on the sidelines that are waiting for opportunities to come out after this ripple effect starts to happen from people losing their jobs, the government shelling out a ton of cash. I mean, the buck's gonna have to stop somewhere, and so
you don't think they'll just keep printing money?
I mean,
what's another trillion?
What's another trillion? I mean, inflation. The numbers of inflation look good, and people are still spending, so there's no deflation.
Why is there no inflation? I guess that's the whole economic podcast you go into. But you know, do you think there'll be inflation at some point because of all this trillions of, you know?
I mean, I'm no economist, but
you would think so, right?
You would think. One would think.
It's like you hear the crazy stories of our parents. You know, we're kind of similar age. I have more gray hair than you, but but like our parents are similar age, and you probably remember hearing like their mortgage rate was 13% or 10%, and obviously inflation, that was trying to stop inflation, right? I'm waiting for that to happen again. I just don't know when it's going to happen. It's like, but when you start seeing the Fed open up its checkbook and you see these trillions coming out, right? We didn't see that with it was billions and billions. I don't know how many, was it back in the TARP days? I think it was $1 trillion, or it was close to that. There was hundreds of millions of billions of dollars being shelled out. Now it's in the trillions, right? So I didn't see any inflation happen, although some prices went up on things. There's this hidden inflation of real estate, right? Real estate values keep going up. So I don't know. I think it's going to come at some point, right?
It's a crystal ball thing. I mean, it's going to have to come at some point. Something's going to have to give. I hope we don't have to go to the grocery store with a shopping cart full of cash to get a shopping cart full of groceries, but
groceries have definitely gone up.
Yeah.
For sure.
Which is interesting because Amazon bought,
Whole Foods.
Yeah. So you think that everything would get less expensive. But then again, they have a monopoly on it, so who knows?
Yeah. I don't do all my grocery shopping rarely do I do grocery shopping at my house, but when I do, I'm always like, wow, I spent a lot of money at the grocery store. Could be the wine.
It could be the wine.
Could be the wine.
Keep it coming.
But speaking of economics, what do you think, what's your best guess if you were to have a guess on the rest of the year? Like, do you think things will get better? Rates will get lower? Do you think
low rates?
Low rates are going to stay low.
For sure.
Do you think they'll get lower? Because what's happening is there's these huge waves of refis, right?
Mm-hmm.
Because the rate dropped to 0.5 point or whatever. Then it sort of dies down. The refis start to die down a little bit. But then it's then another dip in rates. And so then there's another wave of refis, right? How low do you think it can go?
I think we'll probably get more acclimated with the space with rates in the 2s. I think that'll probably be a more common, sight. Yeah. I can't imagine something's going to get in the 1. I mean, the treasuries are low. The treasuries are sub 1%. They're sub,
like a 2 years 0.1 or something.
It really, honestly, though, when it comes down to it, they're just going to put floors on it. Yeah. So regardless of where treasuries move, you're just going to have lenders that are going to put floors on where they're pegging the treasuries, because a lender still has to make a return.
Right.
So unless the government's giving out cash at 0%, a lender's still going to mark it up to some extent. They have to. Right. I mean, they have to put. Butts have to be in seats. They have to make money for people that have jobs to actually put these loans on the books.
Right.
So we're going to see, I think it's possible. We're already seeing rates in the 2s. I think that could be a more commonality. I think as we come out of this COVID to kickstart the economy, to keep things back going, I definitely don't see rates going up. Yeah. It's going to be some time. And you said, there's going to be an election. Yeah. Who knows if we still have COVID? Who knows if we still have all these things right after that?
Right. I don't know.
That's
right?
a different.
We don't know.
That's another story.
It's a big.
We're not solving that problem
it's
today.
It's a big mystery, right?
Totally.
And it's crazy to think we don't have better candidates, right? I mean, it's like this. Yeah, that's a whole other thing. But what are your what's your prediction if, let's say, Biden wins? What do you think happens with rates? What do you think happens with the real estate market? Because it's looking that way if you believe the numbers, right?
From a commercial standpoint, I think he's trying to do away with the 1031 exchange.
Which is not good.
Or take those funds and reappropriate them to something else. which is definitely not good from a transaction standpoint
Right.
on definitely the commercial space. And that's going to, I mean, it's really, I don't think that's good for the market. So that's one thing. So I'm not a fan of that.
Right. Because but do you think that would be? Do you think he'll get that passed? Do you think that's possible to get rid of the 1031? That's been a big deal. I mean,
I'd like to say no, but you know,
But
crazier things have happened. I mean, you
yeah.
have a huge a collective group of people that are trying to take a lot of money away from people that have been making it for some time and
Right.
seen appreciation and seen value and recapture that,
Right.
and reappropriate that to somewhere else less, you know, that needs it per se, or is less, you know, a group that's less fortunate, you know,
Right.
what have you. I'm not going to get in the morality of that, but I don't think, I mean, those people have earned that money.
Yeah.
And this country was built on capitalism. And I think that those people have taken that risk. They saw the opportunity and they've realized that appreciation and they're deserving of it, you
Right.
know, and they should be, and they should be able to take that and allow a transaction to take place and allow them to transfer out of one asset into another that's better suited for their
Right.
investment strategy. I see that all the time. People go from apartments to triple net lease deals because they're over the management, and that allows somebody else to come in and buy an apartment building and fix it up and make a better place for people to live that need apartments.
Right.
So
yeah, because if you take that away, what a lot of the consequences that people don't see are things like you take away that benefit, now prices go up, right? So apartment buildings rent will go up if you take away the 1031 exchange, most likely. That's an unforeseen effect of that particular policy.
yeah, we have rent control in California, which
So,
is a
yeah,
whole nother
yeah.
situation. But
Right, or maybe then people don't buy it.
yeah, no, absolutely.
So
It's
the
an asset class that's
1031
like, why deal with the headache?
Yeah, so maybe, you know, there are, what I'm just trying to say is there's unforeseen consequences when stuff like that happens.
Definitely.
And so, you know, we talk about with Biden wins. So the underdog, so they say in the media, which was Trump, if he wins, which can we believe the numbers? We don't know. But if he wins, do you think what happens with the economy? What happens with, you know, I know he's talked about, and he's already done, you know, he's cut some regulations, cut some stuff. What do you think happens if Trump wins again?
I really don't see that much of a difference between the two, you know, the outcome of the two, other than the fact that things that we're dealing with now could change if something sways a different direction than where we're currently at, you know,
Yeah.
given who's in position.
Yeah. But rates should probably still stay
But I think
low.
I definitely think rates are going to stay low.
Yeah.
I think that you know, the jobs are going to start to come back. You know, I'm already, you know, seeing more traffic on the roads, which means people are going to work more. That's always kind of a telltale. Like, wow, the traffic's crazy. The job market must be good. You
Yeah.
know.
Yeah, people are
and
going
as
to
I
work.
see, you know, more traffic, it's kind of a clear indication one way or
Mm-hmm.
the other. I don't really see that much change in terms of going either way.
Yeah. As far as rates or
As far as rates, as far as, you know, an economic, you know, and nothing's going to change overnight from an economy standpoint.
yeah, I think our economy has been healthy. Right, the real estate market's healthy. There probably are some bubbles and some corporate things, but people are working, people are getting money, they're going to spend it. There's going to be a good economy, like no doubt.
Absolutely. I mean, I think the current party's position was to bring jobs home.
Yeah,
And I think that
has that happened from what you've seen?
I would think so. I
Yeah.
think that there's, you know, between, you know, things that are happening overseas and trying to bring manufacturing back to California or back to America for that matter.
Right.
I mean, a lot of those jobs are gone. I mean, that's not happening. I mean,
Yeah.
a lot of that stuff is just not coming back. You can't compete because people aren't willing to pay or earn what, you know, what others are willing to take to get something made.
Sure.
And that's a whole nother situation. Manufacturing typically follows poverty, and there's been a lot of poverty in places, but which creates opportunity, and things are made there. And then you have an emerging middle class, and you have an upper class, and you can really drive an economy
That's what's
that way.
driven to India, I think, too.
India, I mean,
China
now you have
for
a
sure.
huge Chinese middle class now.
Right.
I mean, it's definitely changed, which is interesting because it's like a communist state, and it's like they have, you know, that's, I mean, we can get a tin hat on this stuff, but
Yeah.
but yeah, I mean, it's interesting how that evolves. And yeah, you're right. Like India is, I mean, there's a couple billion people there, and there's a lot of, and the infrastructure is lacking. There's a lot, but there's a lot of opportunity to grow there. I've been there. It's pretty wild. If you want something, the polar opposite from a culture standpoint, from where we're at in San Diego and California, you go to India.
When I don't know if I want to say this, but I will say it because when I went to India, maybe you experienced the same thing. I'd love to hear your side of this. When I went to India and I came back, I had a whole different opinion of homeless people. And because in India, you have no choice. You literally are there and you have your lot in life, basically. You don't have a way to get out. I mean, I think in the last 10 years, there's been some changes, right, in India. But,
some Slumdog Millionaires?
Yeah, there's been some changes. But I went, 25 years ago. So I got to see what it was like in a country that you couldn't change your lot in life. You basically were there, and that's who you were. It was like a caste system.
Yes, very much.
And then I came back, and I'd done my, my dad's a minister, so I grew up donating, or giving to the homeless, making sandwiches doing all that stuff, right? And I've had the experiences where I've try to help the homeless, and have things thrown in my face from the homeless because they didn't like mustard, on their sandwich, and so I've had that experience, right? Yeah. And that's my experience. Maybe there's others' experiences, but my experience was that. And then I went to India, and then I saw the difference. And then I came back, and I was like, it's like when someone goes through a car accident. You can't really tell someone, hey, be careful driving, or don't text and drive, because you don't know what it's like going through a car accident. But like, go to India, experience that, and come back to America, and then tell me you don't like America, right? Like, you have to be able to see a contrast between two things to really know, and that's just my experience. What was your experience in India?
Yeah, I mean, I was backpacking around, like, I was 23. It was, over 10 years ago. So it was quite a different situation. I was kind of just shoestringing, like staying at hostels and doing all that stuff. But I went there. I had built up a good amount of patience, just kind of traveling just with a backpack. And then I actually knew that India was going to be difficult just to do on a solo mission. And I actually had my dad come meet me out there, and he was coming in on a completely different wavelength. And
Indian food.
I mean, he loves that, and we had a great time. But it's like, people, no matter, just the way you look, they think you're a walking ATM. Everybody they want to get a piece, and you're not. There's no way you're going by without them going, "Hey, I need something from you. You have to give me something." So that was kind of an experience, and I was pretty patient with it. But my dad,
that's kind of like
had a harder time with it.
Homeless, right? You go into certain homeless areas in America, you have the people panhandling and asking for this and that.
Totally.
But in India, it's different. I mean, there's similarities, but you're like, I mean, did you experience the thing where they couldn't really change their lot in life? I mean,
no, absolutely. I experienced that. You're right. It's the caste system, and you're going to check out, like the Taj Mahal, and you're having a driver, and you have a kind of a personal conversation, and he goes, it's super hard for me to find someone because I have to find someone within my caste system. I can't marry outside of my caste. And so that's something that we just don't experience.
You don't even understand.
I mean, really. Don't get me wrong. There's probably some blue-blooded, arranged situations in America that exist that we just don't see, or maybe we're just not part of,
right.
But it's just as easy to fall in love with a rich girl as it is a poor one, or vice versa, So that's just something that we don't experience. Like, there's not a caste system here. I mean, but like you said, it does give you perspective in terms of coming back to where we are and how blessed we are and the opportunities that we have that might not be readily available to people that are in those countries. And that's why I think immigrants make up like a vast majority of successful entrepreneurs in the United States. They come here with nothing, and they do it from their bootstraps. They don't even know the language. They don't even know the language, but they have no alternative but to succeed, because it was like, they just don't have an alternative.
Right.
And I had a great time in India. It was definitely an experience. My dad's a big acronym guy, and he came up with one. He said, "India, I'll never do it again." It was pretty funny, but we had a good time. I don't know if I can get him to go. I clearly can't get him to go back, but it was one for the books.
That's funny. I like it. All right, so one of the last questions I always ask my guests is, as entrepreneurs, as people, we have failures, right? And so I always like to know, because you've been through failures, I'm sure. And there's probably one that stands out in your mind that maybe taught you something, or maybe taught you never to do that again, or maybe it's like, now I need to do things differently. Would you share with us one that maybe a favorite failure?
Yeah, I'll stick with the career one.
Yeah.
But I think that I left commercial banking and saw an opportunity to create, a capital markets platform for another brokerage house that I thought there was an opportunity to do so. And it just didn't have the culture that it needed to survive. And I realized that I was doing this for someone else, and I was giving up a big split, and there was some corporate components to that, and it just didn't really work. As much as I thought that there was that opportunity and I really wanted it to work, it just didn't jive. And I realized after 1 year that it was a failure. And I realized, like, if I'm going to be building something and I'm driving my own business and building my own client base and building a platform for me to be successful at, I'm going to do it for myself.
Yep.
And that's what kind of drove me back to where I'm at C2. And because we really do allow for people to be an entrepreneur and drive their own business, but just have some of the tools that can make them, that they don't have to worry about, but they eat what they kill. And I think that me failing at doing it for someone else drove me to a place where I could pretty much do it all on my own. Because I think that's what it's all about. I think it's you have more pride, you have more, will to get up in the day, every day and go at it every day and never give up.
Right.
And every step is a step forward as long as you just never give up. It's like push the energy forward and just brings you to that space to do it for yourself and
That's cool.
Bring others up around you. So that was kind of a failure that I had that kind of brought me to here, and I still got a long ways to go. I'm sure there'll be some more failures, but we'll learn from them.
Well, I think that's what's good about, being able to get through failures and get to the other side of it, is you can learn from them, and that you're actually pushing yourself forward, right? If you're pushing yourself forward, then you're progressing, and that's key to life, key to success, I guess, right?
Absolutely.
Anything you want to leave us with? How does someone find you if they want to find David, Temko, or how, like anything you want to leave as far as advice or help to our podcast listeners?
Yeah, I think that we're in a great position right now to take advantage of some market conditions. And I think if you're in the mortgage industry, you're going to be in a honey hole for a long time. And if there's any opportunity, if there's some qualms that you're having with where you're at from, a retail banking standpoint, and you're considering going to that, the mortgage broker platform, I'd love to, entertain the opportunity for you to come to C2 and see what the values are. From a commercial lending standpoint, I'd love to see an opportunity to help you and your clients. You can see my website. I have a website. It's www.c2commercial.com. That's my baby. You can find me there and reach out to me there. But I think that, this too shall pass in terms of the pandemic, but I think there's some silver linings, and, I think that people by and large, we're social creatures, and we're going to be back to kind of cheersing and having good times and going to social gatherings. And I look forward to that opportunity.
I can't wait to get back to concerts. I love music. I used to, do concerts, but way past life, but I miss concerts. I can't wait. That's got to happen again.
I was just having a conversation with some folks from Colorado, and they brought up that Red Rock Amphitheater. I was like, God, wouldn't that be amazing? I want to go there super bad, but
gotta wait.
In time.
Yeah, in time, for sure.
So.
Well, thanks for watching, everybody, and listening. And please like, share, subscribe. Let us know what you'd like to hear on the podcast next, and we will see you on the next one. Thanks for joining me, Dave.
Thank you, John.
All right.
It's great.
Awesome. Thank you for listening to our podcast. If you guys are looking for more content like this, we have a FundLoans YouTube channel where we give away more tips, secrets, and origination ideas. You can also email us at info@fundloans.com. And if you've made it this far, I think it's safe to say you like our content. So please subscribe, share, and send us your scenarios. Let's fund loans together.